Welcome back to our weekly market analysis session. I'm your host, Joe Forex. All right, so we'll be looking at the dollar index as our manner is. Last week, I told us that this is where I expect price to get to for our support. I marked this area out last week, showed us that this is where I expect price to trade to. And we can see that it actually delivered as expected. It traded to the FVG on weekly time frame. I gave us some scenarios last week. I told us that if the bearish order block on 4 hours acts as a resistance, it's going to send price lower into this FVG. And true to form, it has done exactly how we anticipated it was going to be. If you look at daily time frame, okay, so looking at the daily time frame, we will see how we traded into the FVG specifically on daily time frame. This is the weekly bullish order block. On weekly time frame, this acts as a bullish order block, and then you have FVG inside on daily time frame. So price has traded into the FVG on both daily and weekly time frame. We had Monday bearish day, Tuesday, Wednesday, Thursday we had consolidation days, and then Friday traded into the area we outlined last week. So this was the framework for last week's trade. We wanted price to trade into this FVG. On 4 hours, I told us something on 4 hours. Let's look at 4 hours briefly. So I mapped out this area. I said if we see, because price was here as at last week Friday, and I told us that we want to see this bearish order block act as resistance. It didn't even get there. It just gapped down. There was no trade on Monday for dollar index because of the US president swearing in ceremony. So there was no trade. The market didn't open for dollar index. Therefore, when it opened on Tuesday, we had a gap down. So we could say that this was all that was traded on Monday. And then it gapped down Tuesday here, retraced a bit 50%, and then went back again, traded equal lows, rallied up, FVG filled, order block, and then sold on Friday down into that area we outlined. So that was the framework I had. I told us if this bearish order block holds price, then we'll be bearish. But if it breaks above this bearish order block, then we're going to fill in this range. Go back to the video and listen to my last recording. You hear me say this. Okay, I said if the bearish order block does not hold price, then we're going to run higher and fill in this remaining portion of the FVG on weekly time frame. But if it holds price as resistance, it's going to go down, and this is where we are targeting. And it has done that. It has traded down because this acted as resistance, so it traded down into the daily and weekly FVG. So we can see that right here. Now, what is our anticipation going forward? This, if you look at it very well, you have bullish order block here. So this bullish order block can potentially act as support to send price higher. Now, if it breaks, this is the mean threshold of the bullish order block, this line here. I marked it out in anticipation of what's going to happen this new trading week. So if it breaks below and closes below this line that I just marked out, if it trades below and closes below it, then we are going to trade into this area. What is this area? This area is FVG on monthly time frame. This is monthly time frame FVG. So if you go to your monthly time frame, you're going to see that that is the FVG on monthly time frame. Look at it. That's the FVG on monthly time frame. So if price breaks below the bullish order block on weekly time frame, then we are going to trade into this FVG on monthly time frame. If the bullish FVG, bullish order block holds price and it stays above the 50% of the bullish order block, then we're going to resume our bullish movement to fill in this remaining portion of the CB and then trade higher. Okay, that's my anticipation. Now, if you look at the weekly time frame, the FVG has been completely filled. Let me see. Not exactly, just a little portion is left. Just a little portion is left. And then for daily time frame, it has respected the 50%, the upper portion, the upper 50% of the FVG. All right. So that's what I am looking at. Now, another scenario that I'm seeing here is that if it breaks below this FVG on daily time frame and closes below it, if it trades back again to touch it, that could be a potential sell for dollar index into this monthly FVG. That would mean that Euro USD and GBP USD, my favorite pairs, will rally higher. So that's the analysis for dollar index. We're looking at want to see how price reacts around this FVG, this area here. Want to see how price reacts around it. If we see a sharp movement away from it, all right, then we're going to resume our bullish movement. But if it doesn't and it trades and closes below it, then this is where we are targeting. So that's the framework for what do you call it, for dollar index. Mind you, this is the 50% of the bullish order block on weekly time frame. So these are the two areas I'm looking at. If it goes below that, then this is where we are targeting. Otherwise, if it stays above this, we're going to go and continue our bullish movement. So that is it on dollar index. Let's look at the Euro USD. So we had a bullish movement for Euro USD weekly time frame. It traded right back to the bearish order block, failed to touch the 50% of the bearish order block, and see that failed to touch it, stayed below it, but has traded right back into the bullish order block. Okay, so the dollar continues its bearish movement. This will go higher, and this is where our next area of interest would be. This CB here, sell side imbalance, buy side inefficiency. This CB here, we had only down close candle. There is no corresponding up close candle. So if if dollar trades bearishly, this is going to send price higher into this area and potentially trades to this mitigation block. Now, if dollar respects that 50% of the um, bullish order block on weekly time frame and decides to continue or rally higher, then this will consolidate here and then start trading lower. On daily time frame, Euro USD daily time frame, let's see what we have. So daily time frame, we had Monday bullish movements, Tuesday, Wednesday, Thursday we consolidated, and then Friday we rallied higher to create equal highs, traded into that FVG on weekly time frame. Sorry, the bearish order block on weekly time frame. This is the 50% mark. That's the mean threshold of the bearish order block. It didn't touch it. It didn't touch it. It's rejected, and this is where we are now, filling in this FVG completely and has traded out outside it. So could it be a potential movement higher? This is equal highs. I feel it's too clean. We also have clean highs here. So if dollar continues bearishly, then this will go higher, cleaning this buy side liquidity, resting here and trading into the bearish order block here. That's what I'm looking at. So that's what I'm looking at. So it could come, test the inversion FVG here, test it, and then rally higher, take out this buy side liquidity and trade into the FVG and also this order block right here. that would mean that dollar has to go down for this to fulfill this objective. If dollar resumes bullishly, then this will consolidate here and go lower. Mind you, I still have downside objectives. Okay, the 50% of the daily FVG here has not even been traded to. Then the weekly time frame, we have an FVG there as well that has not been traded to at all. They just poked into it a little, and then we saw a sharp rejection. So this for me should be a short-term low. This is just a retracement to continue lower. So it could pull back up into this range. This is now what do you call it? Weekly time. So it could pull back up into this FVG here and then continue reverse to start going lower. But this is just a short-term low for me. It's just a short-term low for me. So that could be that dollar also will just rally down to the monthly FVG and then reverse and start going higher. If that happens, this will rally up into this area and then reverse to start going lower. Okay, I think that's also this area is also a monthly FVG. Let's just take a look. We have a monthly FVG here, monthly CB. Look at it here. That's the area we're expecting price to trade to on weekly time frame if dollar goes bearish. Okay, if dollar trades to the monthly BC, then this will trade to the monthly CB right here. So let's go back to weekly time frame. Okay, so we have this is the area, the monthly CB. That's the monthly CB. So price could trade to it. If dollar is bearish, price could trade to it. Otherwise, we could consolidate here and go lower. All right. So that's for that. The next is GBP USD. GBP USD was also bullish. This has traded to this low, creating equal lows. I expect it to trade into this level. It created that equal lows, giving that feeling that price is going to what do you call it? Respect this area as support to go higher. It has done that. It might give that impression to people that trade support and resistance to continue expecting higher prices. And this may trade up to this level and then give up the ghost to trade to this level we have outlined. So because dollar was bearish, this was bullish as well. We're expecting that the dollar uh, resumes its bullish movements. This might trade up to this proportion block or this bearish order block and then give up the ghost to go lower. But at least we're expecting higher prices on this particular, but at least you take out the previous week's high. Same thing goes for Euro USD. Euro USD will also trade higher to take out the high before it goes down. But all that will be on the premise that dollar would be bearish. Okay, so that would be on that premise. Okay, so once it trades to this level, which for me is my area of interest, if it trades to that level, then I want to see price starts going down. So we might consider ourselves being bullish on GBP USD, bullish on Euro USD, and then bearish on dollar. That's what I'm expecting. That's what I'm expecting. Mind you, we have this is the last week of the month, the last week of the month, last trading week of the month as well. So the whole of the month has been, let's see what we is being indecisive. All right, it went bearish, and then last trading week flushed out all the bearishness, and this is where we are right now. It's like an indecisive month. Okay, so we could. I'm not seeing any other movements. There's no form of inefficiency above this. except what do you call it, this old swing high, and then last last previous month's high as well. Otherwise, everything seems bearish to me. This could just be a fake rally to the upside. Okay, so we have relatively equal lows here. We have the rejection block here that has not been traded to. That's why I anchored um, this particular box you're seeing here. It's daily FVG. If you go to daily time frame, you see it clearly there. It's actually that is daily FVG here. That's where I anchored that to. Okay, that's where I anchored it to. So we have this range has been filled. Any movement higher, equal highs, and then trade to this other block here, also known as it can also be called mitigation block. So price could trade to that and then start going lower to this area that I have outlined. All right, let's go to the next pair, AUD USD. Of course, because dollar is a quote currency and dollar declined, it's expected that this will rally. It did that. What other point are we expecting to rally to? We have an area of interest here, the shoulder block or mitigation block. Price could trade there. Any form of bullish movement, that's where we want to see some form of resistance before it starts to decline on weekly time, daily time frame. I think this area here, that's where that's where it is. Let me see. Let me put a mark there. Okay, that area there. So I think it might not even get there. This particular one is okay. Price trades to it. That could be a potential sign for reversal. Or this average can even hold price to send price lower. Okay. All right. The next is NZD-USD. It was also bullish, traded into FVG. Any movement higher, we have a little FVG here as well, and then bearish order block for potential reversal from that point. The next is USD CAD. We have this range that has not been met, and that's from this relatively equal highs. Okay, so any retracement here could just be to go lower and to, give the market makers the opportunity to buy more. Okay, same price higher to clear this buy side liquidity. So we are still bullish on USD CAD. So it might potentially trade, take out this low if dollar continues this bearish movement. It could trade into you can see a little leverage here. It could trade into that level and then reverse to start going higher. But ultimately, before March, I want to see price or at most in March for the end of the first quarter, price should be able to take out the equal highs that I have lined there. So we are still bullish on USD CAD. USD JPY, this high is my area of interest. I want to see price take out this high. All right, it was bearish. Of course, you expect it to be bearish because the US dollar is a base currency here. So since dollar index was bearish, this also was bearish. So I want to see it give up the ghost and trade higher, take out this high. But if dollar remains bearish, that could make this consolidate here because we have a bullish order block here and there's an FVG here. So we consolidate here for a while before it starts swelling higher when dollar begins its bullish movement. On USD CHF, equal highs as well, and that's where my interest is. It could take out this low and then finally pick up the ghost and start trading higher, take out this high, and then we'll see if it has potential to trade into this area of inefficiency. That's for USD CHF. Our indices, I told us that what happened 2 weeks ago, that I expect that market is going to continue its bullish movement. We can see it has created, though it took it out, the high of this candle is at 6,118.4, and the high of this candle is 6,098.2. So it took it out by some point. I want to see it, really take it out, create a significant high, okay, before any form of pullback or retracement. Nasdaq, same thing, Okay, that's giving us a cracking correlation. Nasdaq failed to take out the high here. This could be a 660 approach. Later on, this will go higher, taking out this high. Okay, and then before any reversal to the downside. Same thing here. US 30, Dow Jones Industrial Average 30. This also should go higher, take out the buy side liquidity, create a new high. On gold, let's see what happened for gold. The previous high was 2,790 and 11 uh, points. Let's see what we have here. 2,786. So it has not taken out the high yet. I expect it to take out the high. I think once it takes out this high, okay, that will give room for dollar to start rallying. Mainly this takes out the high and gives us sign for reversal. That will give room. Dollar might now decline and then give us room for a rally higher. So I guess it's waiting for um, gold to take out the high before dollar resumes its rally uh, to the upside. Okay, Bitcoin. What did Bitcoin do? Bitcoin has taken out its all-time high. It did that last week. The high came in around 109. I predicted 110, but it fell short of it. I think this week we might see 110. It will hit 110 big figure. Okay. Last week I told us it's going to get to 110, but it got to 109. It didn't get to 110. This week I want it to go to even go above 110. That's what I'm expecting. So let me put my line for Bitcoin and then let's wait to see it trade to that level. Okay. 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 110. That's where I expect price to trade to. Should take it out. Should take that high out. The next is that's it. That's it. So we expect dollar to be bearish this week. Expect Euro USD and GBP USD to be bullish. AUD USD, NZ USD bullish. USD CAD, USD CHF, USD JPY bearish. And then our indices bullish. SP 500, Nasdaq 100, Dow 30 should be bullish. And then uh, gold should also be bullish. And then Bitcoin bullish. So that's our anticipation for this new trading week. All right. So thank you. God bless you.